Welcome to another episode of Invest Smart with Steadily. Today we're diving into property management solutions tailored for real estate investors. I'm excited to have Daniel from Home 365 with us today. Home 365 has been getting a lot of attention for how they approach property management, which is quite different from the other things you've seen out there. And we're here to learn why they're becoming so appealing to the real estate investor community.
Hi there. Great to be here. Thank you for inviting.
My pleasure. So let's dive right in. What have you guys done differently that's causing you guys to get so much attention in the property space?
Look, real estate investing is super tough. We're trying to make real estate investing accessible for everyone, for the masses, for anyone in this world, okay, to diversify their cash into real estate investing. But there are a lot of risks, and a lot of people are not able to identify those risks or process them. And that's what holds them basically from investing in properties. You know, everyone knows that this is a great store of value, and that's how you can pass generational wealth forward. But the risks is what holding people back. And the other thing is we're focusing on single family rentals, and the profile of investors or property owners in this space, basically what we call them retail mom and pop investors owning on average one or two properties. People that either accidentally became landlords, got a house from the grandma, and now what do I do with it? Or read this Rich Dad Poor Dad book and decided that that's their dream to own a property in Phoenix in Arizona. Those people have day jobs. Those people are busy. They don't want to hear stories about tenants and toilets and don't want to deal with this thing. And how do we make it super passive, super predictable investment for the people? Still be a landlord with, of a real piece of real estate without the pain associated with being a landlord. And here's where we came up with a completely different business model to your question. We are pretty much underwriting the profit line for rental property. We're able to predict risks around people, like vacancies, the frequency of vacancies, the length of vacancies that might happen, delinquencies, and various maintenance issues. So pretty much we predict all those risks for a given property, and through a very solid machine learning algorithm, which is constantly improving, we are able to predict those costs. We generate a monthly premium, which rides on top of the management, call it, business, and blend it together into like a flat rate. We call it the profit protection plan. And from that point on, our investors basically have a very passive experience, like saving money in savings account. If the tenant is not paying rent, we are paying instead. If the property sits vacant while we market it, we are paying the rent instead. And if there are any repairs of any kind, wear and tear related, including turnovers, covered by us. Especially useful for remote owners. And in this space of single family rentals, most of the investors are remote.
Let's use me as an example. So 5 years ago, I bought a rental property in Chicago. If you've been to Chicago, you've seen 20,000 of these properties. It's a 3-story walk-up. It's got like a sub-basement and a couple of units above. It grosses about $40,000 a year in rents, and I'm paying 8% to a property manager there. If it grosses $40,000 in a good year, I might take home $25,000. In a bad year, I might take home $0. So how would that have been different if I was working with Home 365?
Yeah, it's a great question. Look, basically, when you analyze the P&L of that investor or yourself, as you mentioned, you're probably going to generate around, I would say, 60%, 65% net operating income, 30 to 40% would be your operating expenses. Property management would take 8 to 10. Maintenance would go, can go to 15, sometimes to 20, depends on if there are turnovers that same year. A lot of eviction and vacancies can eat into your profits. And obviously a lot of what we call junk fees that management companies need to charge you, because actually 8% is not a lot. How much management can you actually require for $100 per house? On average, rent in the United States is what, $1,500, let's say $1,300. 8% would be $100. So how much really management can a management company put into that property, looking after it with all those crazy events? So understanding that you on average would have around 35% of expenses, we came up with this model, which is a property-specific underwriting, but on average, when I'm looking at thousands and thousands of homes that we manage currently across different markets, including Chicago, 9 different states, 16 different MSAs, The average would be around 20 to 25% of rent, which will leave you with like around 75 to 80% NOI, which is amazing. Means that
Hmm.
you'll have quite a bit of money left in your pocket. And the fact that we are super profitable on charging only 25% versus the previous 30 or 40 that you were paying, it's mainly because of the efficiencies and the skin in the game we have in this business. Like we're sharing risk right now with investors. So the automation of the platform that we are building, managing, I mean, much more efficiently, faster through an automation of that platform, is what helps us to deliver a much better service, in our opinion, for much cheaper. Like the 8% is not a force majeure. I mean, that's not a physics law, right? Why not pay 2% for management if the management is automated and you can profit from other aspects like peace of mind, like time that we're selling to our investors, basically not being involved in this entire thing. Eventually, it becomes a much profitable thing, a plan for the owners and for us as the company. Kind of win-win.
That's super interesting. I'd love to double click on that to understand because being in business for a while, one of the maxims that I've internalized is there's no such thing as a free lunch. And so if there's $1 of rent coming in, that dollar of rent is going to get split some way. And so if at the end of the day, I'm taking home more income from my properties, then somehow money got taken out of the system, right? Savings were had. So when you say, hey, we can effectively manage your property and deliver more to you consistently every year with a guarantee, where are those savings come from? Maybe put differently, what does a traditional property manager wish that they could do that you guys have figured out?
Traditional managers, as I said before, are not getting paid a lot. Okay. And the way they operate is pretty much manually. Okay. There's really no automated platform today on the market. Most of the property management systems, okay, that should help them manage properties, what we call them, they are pretty much flat CRM systems where you might input various data and then extract the same data in different format. Okay, but they do not power any workflows. They don't dispatch vendors. They don't have like marketplaces embedded into their businesses. So being a traditional manager means everything manual, a lot of mistakes, errors. Everything takes time. They need to charge various markup fees for maintenance. They will be much slower to perform. That will cost you more. So if the vacancy, for example, can be filled within, I don't know, 14 days versus 35, that's a lot of money in your pocket. In our model, we are sharing the risk with the owner, meaning if we are slow in renting your property, we are paying out of our pocket. Okay? So we have all the incentive in the world right now to do it fast, but it's not only about incentives, it's about a logistical bottlenecks, call it. Because if you are a small mom and pop investor and now you have vacancy and an owner that wants to buy and sell, how do you split yourself into various tasks? So you have to prioritize. When you build a scalable system, you can do one to many and basically address all those issues at scale faster. I think the lack of efficiency, to put it this way, in a traditional world is what you are paying for right now with this 40% expenses that we are all used to. Okay, it's not a force majeure. It can be much better. There's a lot to improve there. Traditional managers are not scalable, are manual, and we pay for that as investors.
We pay a lot for it as investors.
Exactly.
What brought you into this business? How did you come to start Home 365?
My background is, among other things, is marketplaces. I'm passionate about marketplaces, building transactional marketplaces. And one of the most, I would say, challenging things in running a marketplace is to predict the demand and match it with the supply. It's that balance of vendors, let's say, if it's a home services marketplace, versus prediction of how many projects they will have on a local, let's say, geo level. It's a very hyper-local business, and the supply side of vendors is very, very skilled. So there is a lot of other factors to match. Think of Uber, okay? Every project is the same pretty much. Take me now from point A to point B. That's it. Like every ride is pretty much the same in terms of how you define it. Think about a house. Everything is different. The property is different, built in a different time, different place, different location, different size, different project. A leak in my home, it's a different leak than in your home. How do you match all that? And that's a huge challenge. Killed a lot of startups, a lot of companies from the boom eras of 2006 and up, where marketplaces were hot cookies, everything was Uberfied. And I came to this area I would say I was not born as a real estate investor. That's not my history. But I was looking at this business. I saw a very traditional industry, very non-techy. There's a lot to improve there. High lifetime values of clients, recurring revenue. I just approach it from scientific standpoint. And if it's a closed ecosystem of property management, i.e. I know how many doors we have, I can tell you tomorrow how many garage doors wouldn't open. I can tell you tomorrow how many water heater problems we're going to have. And if I know that, I can build an automation around it, predict the supply and demand, hire the right amount of plumbers, not more, not less, and then evolve them to be the best through various methods. So basically, controlling the closed environment gives us a lot of information about what's happening in this closed environment.
Makes a ton of sense. And one thing you mentioned is that it's hyper local. A pattern that we saw play out 4 to 5 years ago was several tech companies that were trying to automate property management, but they didn't have boots on the ground. I heard you mention that you're in 9 states and 16 MSAs. So what does that look like from a boots on the ground perspective?
So look, we basically, the beating heart of our company is an ability to process various events that are happening across all our geos and all our properties, and dispatch the right service professional to take care of that. So we operate everything from Las Vegas. We have a very minimal amount of people, usually customer success people, customer relations people in the market, but they are not the plumbers. They are not the photographers to take the pictures of the house. They are not evicting people, right? So the entire idea here is to be able to hire those vendors at scale, manage them at scale throughout our software, and they have interfaces to our software, okay? And then basically control the quality and fire them if needed, okay? And evolve that to a better quality. So that's our DNA pretty much. We operate everything from Vegas. Like if you go to our office, you would see a lot of screens. It's like, in a way, a war room. We control thousands of various events on a daily basis. Might be projects, might be non-payment issues, might be whatever. Just everything that happens with with property management. The thing is that eventually we have more feet on street. We have more eyes on the house than any local company would have with one field agent or 2 field agents running across Chicago from one side to another side during the rush hour. How many houses can you look at the same day? So we have, for example, gig economy employees, basically. 1099s, but eventually Uber drivers in between the rides would go to a property and put a lockbox, would go to a property and put a notice, would check occupancy. Our tenants are actually opening doors in the nearby properties for their future neighbors to allow them self-touring. So that's what we do. We basically leverage the power of the public, call it the power of the market, to do anything that we need to do in a very scalable way. And since everything is, again, closed environment and they use our software as well, we have full transparency and clarity what's happening at any given moment.
I can see how that's allowing you to scale rapidly, but still maintain that local focus. So what's next for you? What's coming down the pipeline over the next year for your property investors?
We are, for the property investors, we are now very heavy on partnerships like with Steadily. We, as a part of the owner experience, whenever they log into their fancy portal with a lot of charts and data and accounting and everything, there is the section right now with quite a bit of value add, we call services from our partners that might make sense. For example, houses you might want to buy. We know exactly what type of houses we manage for you, so we know that you love houses of that size, of that price in Vegas, for example. So our partners might be injecting, or they are injecting, their inventory of parsed individually to the right investor. Same goes with insurance, same goes with financing and other solutions. For tenants as well, by the way. They move in services, security camera services, internet services, just name it. It's a marketplace with open API where we can inject pretty much any type of service to provide value add to our owners. So that's one of the important things as a value for our owners. We do less realty transactions. We focus on management mostly, and there's a lot to improve there as well. More efficiencies and more of that. In parallel, trying to scale as much as we can. Not a fun times to be a startup, but cruising through that.
Daniel, thank you so much for sharing all these insights into how Home 365 is making property management simpler and more profitable for real estate investors like me. For those of you who are listening and looking to streamline your property operations and explore a more hands-off management approach, Home 365 might just be the perfect solution for you. Be sure to check them out, and don't forget to subscribe to InvestSmart with Steadily for more expert insights on protecting and growing your real estate investments. Thank you.